Welcome back. Now in this lecture we'll look at some continuation patterns. Now continuation pattern helps us determine if the trend before the appearance of this pattern is likely to continue. So while in case of reversal patterns we saw that there was a change in trend, in case of a continuation pattern, this pattern only signifies a period of rest for the market, and once this pattern is complete, the trend right before the appearance of this pattern resumes. Now the first of the continuation patterns we'll look at is the rising and falling 3 patterns. A rising 3 pattern is a bullish pattern, while a falling 3 pattern is a bearish counterpart of the rising 3 pattern. Let's look at them one by one. The rising 3 pattern appears when the uptrend preceding the pattern takes a pause. So a rising 3 pattern is valid only in an uptrend. The first day of this pattern is a long white day which supports the upward trending market. However, over the next 3 days we see small body for the candlesticks which as a group trend downward. The body of all the 3 candlesticks remains within the range of the first day's long white body, and at least 2 of these 3 bodies are black bodies. These 3 days are considered to be a period of rest before the previous bullish trend resumes. On the 5th day, a long white body develops which closes at a new high. Now the opposite of the rising 3 pattern is the falling 3 pattern, which is its bearish counterpart. The falling 3 pattern appears when a downtrend preceding the pattern takes a pause. The first day of this pattern is a long black body which only signifies the downtrend in the market. Over the next 3 days, we see small bodies for candlesticks which as a group trend upward. The body of all 3 candlesticks remain within the range of the first day's long black body, and at least 2 of these 3 bodies are white bodies. On the 5th day, a long black body is expected to develop which should close at a new low. Now what we have described here are perfect details of the rising and falling 3 pattern. It is not uncommon to relax some details of this pattern. For example, it is common to ignore the color of the 3 small bodies which signify the periods of rest. Also, the period of rest could last for more than 3 days. The next pattern we'll look at is the 3 white soldiers. Now this pattern consists of 3 candles which form a group of 3 white candlesticks with consecutive higher closes. So all these 3 candlesticks have consecutive higher closes. If this pattern appears after a period of stable prices, then it indicates strength in prices ahead. The 3 white soldiers are a gradual and steady rise, with each white candle opening within or near the prior session's white real body. Each of the 3 bodies should close at or near their highs. This is considered as a healthy method for prices to rise. A caution should be exercised if the white candlesticks are very extended, as this may signal an overbought market, and in such cases it is best to ignore this pattern and not expect higher prices going ahead. There are also other patterns that may involve 3 consecutive white candlesticks, but these patterns should not be considered as 3 white soldiers, and hence these patterns are not considered to have any bullish implications. For example, if the second and third candle or just the third candle shows signs of weakening, then it is called an advancing block pattern. This does not have any bullish implication. In fact, this indicates that the uptrend is close to exhaustion or the prices may actually fall, and hence if one comes across this pattern, it implies that those who are long should protect themselves. One should be especially cautious if one comes across this pattern during a mature uptrend. Signs of weakening could be progressively smaller white real bodies or relative longer wick on the last 2 white candlesticks. Another pattern that involves 3 consecutive white candlesticks but should not be considered as 3 white soldiers is known as the stalled pattern. This pattern essentially indicates that the uptrend may be stalled. This pattern involves two white candlesticks which are long, followed by a small candlestick. After the formation of this pattern, the bull market's strength is at least temporarily exhausted. The small real body of the last candle indicates a deterioration in the market's strength, and so one is advised to take profits on long positions. Now, in case of the advancing block pattern and the stall pattern, it is advisable to book profits, but it is not advisable to initiate fresh short positions, even though sometimes these patterns may be followed by substantial price decline. This is so because they do not necessarily signal a major reversal in the trend.